The year 1720 saw one of the biggest market crashes ever recorded on the London Stock Exchange, largely due to the bubble popping in the South Sea Company. The South Sea Company mainly operated in the transportation of slaves from Britain to South America. When the company was created, Britain was at war with Spain, who controlled most of South America. Therefore, it was unrealistic that trade would take place, and as it turned out, the company never realised any significant profit. However, the company's share price rose greatly in value and peaked in 1720 before suddenly collapsing. The bubble ruined thousands of investors and became known as the South Sea Bubble. Caught up in the hysteria was Isaac Newton, who reportedly lost over $3 million in today's value in the company's collapse. That led him to pen the phrase, "I can calculate the motion of heavenly bodies, but not the madness of people." Putting aside the moral aspects for a moment, Newton knew that unlike physics, investment markets and people's reactions to them behave in unpredictable ways. If we look at the current market conditions, investors are paying 20 times the earnings to own a portfolio of American shares. Buying in at 20 times earnings translates to an investment return of 5%. While this may be okay to buy into when interest rates are down near zero, it is difficult to find the value in shares today when interest rates are yielding a similar return. In effect, share investors are not being rewarded for the risk they are taking, which is why we have continued to skew investment portfolios to higher fixed interest allocations. As Newton alluded to in his famous quote, investing is more a psychological game than one which relies on mathematical formulas. If such a powerful thinker can be caught up in the market hysteria, then it just goes to show how hard it can be to stay rational. I would like to take this opportunity to wish you and your family a Merry Christmas. I look forward to catching up with you again in the new year.